where we have seen a bit of a rebound coming back in after those 2 days of declines after the FOMC minutes. Remember, the Chinese data also hasn't been so good, and they have been talking about curbing their property prices, and that's something that has been bothering this space. But today is a good day, nearly 0.5% of a rise coming in for the crude prices. We started Asian markets with strong gains coming in for base metals as well, nearly 1% up on copper, but now it's 0.5% on the higher side. Very strong gains back in for crude prices, and we have seen the gold and silver prices also rebound. So from 1560 of a low that you saw day before yesterday, we're holding quite nicely around 1580, another 0.5% jump up coming in for gold international prices there, and the silver for you nearly 1% of gains on for that as well. Let's get in then Kishore Narne. He's Associate Director, Head Commodities and Currencies, Motilal Oswal, and he joins us live on the show. Kishore, hi, welcome. Let's start with precious metal space now. Would you say that much of the pain is done for at least the near term?
I don't think so, Manisha. I think we should be going back towards maybe in case of 1480 kind of levels in the due course. So I think we've just in the beginning of the pain for the gold or bullion markets for that matter, as if we see that fundamentally or on a longer term perspective. Yes, for a very short term, maybe for the week, you might see that yes, the pain is over, but I don't think this pullback could be really sustainable pullback until unless there is any supportive factors or any triggers coming up for now. So I think this a pullback towards 1595 should be seen as a selling opportunity. On domestic markets also, anything close to 30,000, 29,950 kind of levels should be used as selling opportunities. A short-term stop loss could be at around 30,100, and on the lower side we can look at 29,600, maybe a couple of days, but I think again it should be consolidating between around 29,200 to 29,900 for a few days before falling further.
Kishore, last year we had maximum reports talking about $3,000, even $5,000 per ounce for gold, and this time around those have turned around. 1,500 is what you're hearing on the street. Where do you look at the prices now on an average ranging in this year?
Yes, Manisha, I think if you remember that we have been talking about this gold bubble being going burst for a few months now. I think we have started to turn bearish in last October or so, and we've been maintaining that bearish stance for so long time. So despite the markets being moving higher because of the rupee depreciation which we have seen. But I think again at this point of time the green shoots in the macroeconomic environment across the world, especially in China, especially in Europe and US should be detrimental for fresh inflows of money. So that itself will stop gold from climbing anything further. And on the lower side you have pressures coming up from the money actually outflowing from gold, that is from the ETFs or any hedge funds which have been there heavily invested in gold, and also for that matter physical gold investments which are there across the world in the hands of investors who could be looking to liquidate once they feel that the gold rally is done and probably we might be going for a deeper correction. The investors will be going out of gold, so that itself will provide a huge amount of liquidity in gold physical markets. And the outflows from the ETF, especially the SPDR ETF, could be a huge supply factor boost in physical markets of gold, where I don't think if there is any supply of 500, 600 tons from ETF itself, sure, the markets would not be able to absorb this supply without any major correction in gold prices.
Kishore, so if you're not buying precious metals, that's gold and silver, do you think base metals have an idea or a possibility of turning around? Because as of now, there's not too much of data supporting that as well.
No, Manisha, I think the entire commodity markets might be for a fall maybe for the next few days before base metals and energy might revive again further. But I think for the moment, I think the entire market remains bearish. Even copper, any pullback towards 431, 432 should be seen as a selling opportunity for short-term purposes. Stop loss should be around 433 for the day, and on the lower end one can look at targets close to 427. But again, one of the most beaten down commodities, nickel appears to be a good to be giving a good pullback. So anything close to 930, 940 is possible in nickel. So with a stop loss of 900, I would suggest buying nickel at this point of time. Maybe it's a bit of risky trade, but a good pullback, decent pullback could be expected.
Panel question, and this one is on energy pack. How are you looking at crude prices? Because they also have declined quite sharply if you look at this week.
I think again in crude also we should be falling back towards 92, 92 and a half in WTI before any further up move. So I think we remain bearish on crude as well in domestic markets also, despite rupee being weaker at this point of time. So one can look at targets close to 5,045 kind of levels for the day, but maybe in the short term one can look at 4950 kind of levels on MCX domestic market.
Hitesh, let's come to you then. What's your sense coming in for gold prices today?
See, after being under immense pressure during the entire week, gold prices have at last managed to bounce back from the support level of 1550 per ounce. And the weak economic data from US actually has kind of reinforced the safe haven appeal for the yellow metal, and which can be corroborated by the fact that the CBO volatility index or the risk aversion index has also surged by 30% during this week. So in that case, I think we prefer to remain bullish on gold in the short run, and we prefer to buy gold April contract at 29,650, the target of 29,900 and a stop loss of 29,480.
Hitesh, also what's your sense coming in for copper? Because after that sharp decline that we have seen most of this week, today seems to be slightly better day.
Yeah, it is, but I'm not comfortable with copper considering the kind of deteriorating fundamentals, because if you really look at the LME warehouse stocks, they are up by 30% on the YTD basis. And in fact, the cancelled warrants have also been declining. If you really see the cancelled warrant at the current juncture, they stand about 15% of the total warehouse stocks as compared with 25-30% during December or November last year. So it clearly conveys that the supply is easing, and the demand in context with China has been moderating. And the other factor which is actually also weighing on the base metal complex as a whole is the concerns of China imposing restriction on the housing markets. So I think the upside is limited, and I would prefer to sell at a higher levels. So for today as well, I would prefer to sell MCX copper Feb contract around 431 with a target of 426 and a stop loss of 434.5.
Kaushal Jaini of Dani Investment Services joins in on the show this afternoon. Kaushal, thanks for chatting with us on ET. Now, first up, what's your trading call on gold? What do you recommend for trade today on gold?
Gold has seen a critical support at around $1,520 to $1,530 on the international arena, and we expect these levels to be maintained. A great sell-off yesterday and day before yesterday after the US statement that they are not going to take more of QE3 and could be easing out the QE3 over a period of time. This has led to sell-off across the board in commodities and also across the board in equities. For the day, we expect gold to have a critical profit booking or maybe a short covering session. One can go long in gold at around 29,680 levels with a stop loss around 29,620 and a target of 29,800. But one needs to be noted that these are not the levels to go short. Any short positions which are created earlier needs to be exited, and a close above 1600 levels in gold could again see gold rallying back to $1630, $1640.
Right, Kaushal, and what about your view on crude?
Energy has been the weakest amongst all. Crude, we have seen a great sell-off from the highs of $98, $99 to the low of around $94, $95. We still are not bullish on crude. Crude we expect to dip further over a period of time. Maybe in a quarter or so or two, we can see crude dipping at around $87 to $88. So one should know that crude is not a good bet on an overall basis to go long. One can go short for the day trading session at around 5,100 with a stop loss around 5,140 and a downside target of 5030 to 5020 levels.